Welcome to today's Deal Final Corner. So this is your weekly property talk show brought to you by Property Filter, hosted by myself, Guillaume Black, your favorite Frenchman, CEO and co-founder at Property Filter, the UK's highest rated platform to find deals. And as you know, we are on a mission to empower our members to find thousands of deals each and every year, thanks to the Property Filter blueprint. And the purpose really with this Deal Final Corner is to give you the best, really the most current and best available resources by inviting expert guests who will share with you the latest, most current strategies, tactics, and secrets about what actually works right now in terms of finding and making deals and the reality of scaling a high-performance business in property. So really my pleasure today to introduce you to Kirsty Rogers. So on today's Final Corner. So Kirsty is the auction sales director at Together Money. So she's got decades of experience in the company. She's built strong, lasting relationship with clients across the UK and overseas. Many she's worked with and supported since the very start of their property career. She works very closely with developers and investors alike, and very much helping them achieve their goals, by giving them all the money they need to do their deal, So Kirsty is also known in the office for being the fastest to get money out of the door, sometimes in hours and days, not in weeks and months. So she's a very, very good person to know and to have in your power team. So what we'll cover today. So we have a clear. So there's some really cool stuff coming to the market as well, and I know Together are bringing. So clear breakdown of 100% funding. How can you get all the money for your deals? How do you structure the deal so that basically Kirsty and the team Together can help you with that? So how to cover the entire purchase price, eliminate like the cash barrier for you to grow your portfolio. How to unlock hidden equity? So maybe you can use already properties you already own as a cross-lateral, as a way for you to get more money for your future projects. How more broadly Together can work with you as a funding partner. You can discover how actually now is quite a good time to be doing things in auction, and how auction finance can very well be something quite specific you look into, working with Together, working with Kirsty to help you with those deals. And then I know because she's going through lots and lots of deals each and every day, each and every week, we can pick your brains on actual success stories, actual deals she's been working on sort of today, yesterday, this week, last week, over the last 10 years. I'm very much looking forward to it. And the whole idea is you walk away with the confidence, the roadmap to be able to move fast, act decisively. As you know, in property, there's two speeds. It very much is, the vendors don't get motivated until they want to get rid. And then when they want to get rid, you want to be really fast, So that's really where the team here is going to be able to help you. So very much looking forward to learn more. So thanks a lot, Kirsty, to join me. So if everyone else, could join me and giving a massive Property Filter welcome to Miss Kirsty Rogers. Hello, welcome.
Thank you. Thanks for listening, everyone. You'll have to forgive me. I'm a little bit of a technophobe when it comes to sharing screens. I'm not as hip as some people, so I'm just gonna try.
If you need to, worst case, I've got your slides, and I can very much support you. Worst case.
Let me just. I will try my utmost to not be to get this up and running, but you might have to. You may.
Yeah, that's cool.
So. Yeah, for some reason it's not letting me.
I've got it. So just bear with me just a sec. I'll open it up and share my screen. So do you want to tell us? You want to start already? And then.
Yeah, perfect. So, I am Kirsty from Together Commercial Finance. I've been with the company 10 years. In September this year, so long time. I started out on the auction team, driving up and down the country, going to various different auctions. So I'd be in Scotland one day, Norwich the next day, London another day. So done a fair few bit of miles, and predominantly my client database is clients who started their journey buying at auction. Some of them have changed tactics now. Some of them buy off market, on market, direct to vendor, bank repossession. So I cover a wide range of purchases, but predominantly it is auction. As a company, we are lending around 300 million a month. over around 1,600 transactions, and that is across the board. So that is personal mortgages, second charge personal loans, bridge and finance, development, buy-to-let, commercial. So anything property finance related, we can assist with. We like to build relationships with people. A lot of clients that I still deal with to this day, I have dealt with since the very first week of together. So we like to support people. We like to build relationships with people. We've been going as a company now for just over 52 years, and we want to get to £468 million a month in funding. So hopefully everyone on this call can help us achieve that. So you'll notice on my presentation that it says 100% funding, not 100% loan to value, and that is really important. So there are a lot of lenders in the market who will lend, if you're buying below market value, they'll lend a higher loan to value and potentially lend up to 100% of the purchase price. Unfortunately, as a lender, we wouldn't be able to assist with that. We like you to have some skin in the game. So what we mean by 100% finance is, a lot of clients that I speak to are asset rich as opposed to cash rich, and they feel like that because they haven't got that capital in the bank, they can't expand as quickly as they would like. Also, a lot of them are really lucky, and before all of the Bank of England base rate shot up, a lot of them are on really good deals with their first charge mortgage lender. So what we try and do is, if clients are asset rich as opposed to cash rich, we can utilize the equity in your current portfolio in order to put towards new purchases, which I'll go through and explain in more detail. And I'm finding more and more people are looking down this route. So this is how we can do it. So by utilizing property or properties that you own that have a reasonable amount of equity in or are unencumbered, which obviously means completely mortgage free. Now, again, sadly, we wouldn't do 100% LTV on those assets as well. So it's important for us to make clear that they do have to have a reasonable amount of equity in. And what I mean by that is, really simple example. You own a property that's worth 200 grand, and we will lend up to 75% of that 200 grand, which gives you a gross figure of 150,000. Now, if your first charge balance is 50,000, that we would have to minus that 50,000 that you already owe off that 150, which would leave you £100,000 worth of equity to play with, which leads me on to me next, the example that's being shared at the moment. So we deal with a number of examples like this. So new purchase, £200,000, gross loan amount would be 150,000 on the actual acquisition. So that's the purchase. Then you've got additional security with 300,000. Current mortgage on that additional security is £100,000. So equity in the property under our criteria is 300,000 times your 70% leaves you 210,000 gross, minus the first charge balance leaves 110. So across both properties, that gives you a gross figure of 260,000. Now that's just a really simple example. So the purchase is only on this particular example 200 grand, but you have got the ability to, as I say in that example, borrow 100% of the purchase price. And if you wanted to, you could borrow a little bit more to cover, your stamp, your legal costs, and any refurbishment costs that the property may need. We can do it 2 different ways. It's entirely up to you. We can separate the purchase and the equity into 2 separate deals, or we can put it onto the one deal. It's entirely up to you. We don't have to just look at investment properties either. We can also look at equity that you own in your own residence. So again, a lot of people think that because it's your own residence, you're not able to utilize the equity in that because you might be buying the investment property in your in your company name. So obviously, residential is usually held in your personal, and your investment could be held in a limited company or a trust, dependent on what your business model looks like. It doesn't make any difference to us as long as you're utilizing the equity for business or investment purposes. We can still look at raising equity on your own residence as well. Obviously, you have got to be mindful that it is your own residence. So if for whatever reason the deal doesn't go as it should do, you would be at risk of losing your own residence. So you've really got to make sure that those numbers stack. You've got to make sure that you've got a clear, exit strategy in place, not just one exit strategy, a whole host of exit strategies, especially when it comes to your own residence. As I'm sure you've been told, by many lenders and brokers, the most important thing when taking bridging finance on is making sure you have got that exit strategy in place. You've run the numbers multiple times, because this example is for a bridging facility. So usually our bridging facilities are for up to 12 months, but they are completely flexible and they can be repaid at any time during those 12 months. There's absolutely no minimum term on them either. So you have got that flexibility to pay us back whenever you like, and there's no early repayment charges for doing that. Everyone with me so far? A lot of information to take in. Great. If anyone's got any questions at the end, more than happy to run through that with you.
There will be.
Yeah, I'm sure there will be. So that is a really what I like, especially with the 100% funding angle. I really like to minimize the amount of information that you get on that, because if you are just starting out or you've never thought about doing, utilizing equity in your other assets, it can be a lot of information and it can bombard you. So what I like to do is obviously run through the presentation, and then if you've got any questions whatsoever about what I've discussed, if you've got any deals, that you think you might be able to utilize this with, fire away. More than happy to run through with you.
Awesome, Kirsty, thank you. And I've got some questions actually on. So I think the reputation together has built in my mind, and certainly you have built in my mind, is the speed of it all. So every time I've been to the office, I'm seeing you like, I need to go do this. I need to go and close this deal, right? Because they've asked me this morning, and I told them I'll give them the money today, right? Or some stupid things like that. I'm like, what the hell, right? So can you tell us a bit more about typically, typically, what are the deals you love doing, the great ones people bring to you, and therefore you can help them the most with the speed, and money like speed in the in the deal making space, or of sometimes like distress sales and giving the vendor what they want or what they need quickly, etc. So can you tell us more about your whole experience of this?
Yeah. So the deals I love doing the most are the small little 2-bed terraces. They are our diamond deals. They are low risk, and we would do them all day, every day. So with a typical, 2-bed terrace property purchase, dependent on where you are in the UK, you're probably looking at anything realistically from £40,000 purchase right up until, 400 grand, purchase, as I say, dependent on where you are. But those types of deals are what we call our bread and butter deals. So we can do a free desktop valuation on the property if it's fully residential. We can lend up to 75% usually, and I say usually because if the property is fire, water, or structurally impaired, we may not lend up to 75%. It might be a little bit lower. But typically, if somebody comes to me with a deal today, and it is a fully residential purchase, there's no quirks. And what I mean by that is a lot of people are getting creative with how they purchase property, which I can fully appreciate. People want to retain as much capital as possible so they can spread the capital out over multiple deals. So we're getting a lot of vendor deposit deals, deferred deposit, and things like that. With those types of transactions, they can get a little bit sticky. But if it's straightforward, 75% to purchase, client's got 25% to put in the deal, whether that be asset-based or capital. We've got images of the property, application form, some proof of income. We can literally get the deal done within 24 hours of you submitting the application to us. Now, we wouldn't necessarily do that on every single deal, but we have got the ability to do that. So I've just had a call from a client saying that he needs £500,000 by Wednesday of next week. But it's on 2 really nice cottages. We've got a previous file that he's done for, he got done via another lender that was unfortunately let him down. So we'll be able to get that application in today, get legal documents out tomorrow, and we'll be able to turn that around by Wednesday next week.
Yeah, that's good. On people who might be thinking, okay, that's great, you are quick, but my solicitor is shit, so how do we go about that, because my solicitor really wants to do the searches and this and that. Can you give a bit of an advice from your 10 years of experience in doing this?
Absolutely. So yeah, I agree. Some solicitors can be the issue rather than part of the solution. And I don't like doing this, but especially when clients are buying at auction or they are on a really tight deadline and they are at risk of losing their deposit. I have had to say to some clients, if you continue to use this solicitor, you are gonna lose your money and you're gonna lose the property. And we have all, I've had to have that conversation multiple times. We have got a list of solicitors that we deal with on a day-to-day basis. We can't recommend them because we haven't personally dealt with them, but we know that they're quick. We know that they understand our process and understand our legal documents and what we require in order to release the funds. With regards to the searches, we can accept no search indemnity, which doesn't cost very much. So we don't have to wait for those searches to come in. So
just for everyone to understand, so the normal conveyancing is the buyer solicitors make sure everything is right. So they do report on sort of titles, reports on the searches, like all the different available data around the property, do some due diligence, and then they go back and forth and query and this and that. But you can buy an insurance policy basically for like 100 quid or 50 quid, that basically say, okay, any risk that comes from future searches, you might have it. And then sometimes in auctions, part of the auction, the legal pack, you have those documents available. But so yeah, it's working with the right solicitor who basically is not your normal residential home buying recommended by the estate agent type solicitor.
Yeah, it's important for everyone to be on board with the timeline. It really is, because if your solicitor doesn't understand that, if they don't complete within this timeline, you are either going to lose your deposit or you're going to incur fees. you can really get into trouble, especially with auction purchases. And with us, we offer a dual rep, which means that your solicitor on purchases, your solicitor works on both sides of the transaction. So for me, the benefit to that are it keeps the cost down, and it eliminates your solicitor hasn't replied and my solicitor sent replies a couple of days ago to you. It eliminates that because they are the solicitor working for us and for you. So it cuts that out completely.
So me as an investor, can I go around, do deals, and suggest to a vendor, say, because you want the money so quick, etc. Maybe one thing we could do is we can have dual representation. So here's a list of 3 solicitors we've worked with before. Like, just pick one, doesn't matter, and they're gonna have on both our behalf, your behalf, and they understand, the lender is gonna lend me the money to do the deal with you.
As long as the solicitor's happy with that and they don't feel there's a conflict of doing that. Yeah, we haven't got an issue with that. And as I say, it's really important when you're working under strict timelines that you get a really good solicitor behind you, because that is the key to getting the money out the door quick.
Okay, no, that's cool. So let's go through some of the questions here. So yeah, thanks a lot for that. So on your 100% finance, basically is to have an asset you can put in collateral. So the question is, what if I don't have a property on my own? What other structures you'd be happy with? So sometimes you'll have private investors' money, someone else's property you can put as collateral. Your parents' property maybe.
Yeah, we can
explain different structures you've seen, where maybe I'm new to property, I'm really good at doing deals, but I don't have this collateral I can bring to extra things. So
so if you have got if you're going to bring an investor on board, or do a little bit of do like a JV, and they've got assets in the background that you can utilize, that's fine. You can use family members, friends, parents. They have got to understand, they will have to get independent legal advice, because they've got to understand that if they are putting their house up as security on this deal, and if they are not involved in the company who is raising the capital, they need to understand that in essence they've got no control over what goes on with that. With that deal. So if for whatever if the borrower decides that they don't want to pay, or the deal doesn't fit anymore and they default, again, they're at risk of losing the property. So as long as they're comfortable with that, they get independent legal advice. I've got a client and he uses his mum and dad's house consistently on every single deal that he does as additional security. And they've got no issue with that. They trust him. They trust the process. He's got a proven track record, buying, selling, buying, refurb and selling. So yeah, they're completely comfortable with it. And he's been doing that for many years now.
Yeah, the cure to the best risk mitigation to all of this is to do great deals, So if you do okay deals, or average deals, it's quite a risky business, but you have to do great deals.
Yeah, and there's times where I have, this, what we're doing, raising capital for business and investment purposes. Yeah. This is an unregulated, space. However, we still need to act, responsibly, treat customers fairly. And there's times where clients have wanted to do a deal and wanted to raise capital on their own residence, and I've said no, because I don't believe that the deal stacked, and they would get stuck, and they would be at risk of losing their own property.
Yeah, thanks for that. The next question from Manisha is, how does it work with interest? Are they serviced, paid up front, or is there, whatever different?
We don't have a preference. So on all of our bridging facilities, we don't offer roll-up. We only offer retained interest, which, as you may know, if you opt for retained interest, it just means that you're going to get you're going to net less when we come to fund the deal, because we deduct the payment from the loan amount.
Okay.
And obviously, if you service it, you're going to get more money day one. Now, the retained option, a lot of lenders will not give you a choice. A lot of bridging lenders will not give you a choice. You will have to. They will make you retain the full 12 months worth of interest. Whereas, as I say, we've got no preference. You can service it if you like, or you can retain it, and you can also tailor the retained option as well. So if you don't want us to take all of the 12 months up front because it's taken too much capital out of the loan for you in order for you to complete, we can do 3 months retained, 6 months retained, 9 months retained. We will tailor it to meet your needs.
Yeah. And then for anyone who's asking, what happens if I repay early? You pay back the interest, right? So,
We do. So I've just had a client on. It was yesterday. He was redeeming his loan, and he opted for full 12 months retained, and he only kept the loan for 3 weeks. So he will get 11 months back as a refund on the redemption balance. So you will only pay interest on the loan for as long as you keep the loan. We wouldn't, if you repaid early, we wouldn't keep those full 12 months.
it's calculated on a daily basis, yeah?
Unfortunately, our interest is calculated on a monthly basis.
Month. Okay. So as you go into like 1 month and 2 days, that's 2 months interest.
Unfortunately, yeah. And I do try and highlight that as much as I possibly can with clients. Hopefully, with our new amazing system that is going to be launching later on.
I've heard about it for 2 years, your system.
Don't start Scott off. You'll never get him. You'll never shut him up. That's my boss. We've been integrating this system for a good while now. Fingers crossed, we're almost there. But hopefully, once that's all integrated and bedded in, we can hopefully look at daily interest, because it's important to clients.
Yeah. I get it. It's the admin of it. So reconciling everything. So yeah, cool. Next question is from Stuart. So could this work? So I'm guessing the question is about collateral and 100% funding. Could this work with a buy-to-let property as a collateral? £400,000 value. There's £200,000 first charge mortgage on it. What could be the additional borrowing on it?
So sorry, did you say it was worth 400,000?
400, and the balance of the current mortgage with the first charge is 200.
Yeah, so there'd be £100,000 capital to play with, equity that you could utilise on that.
If you remember so if I manage to go back to this, the formula was it's 75%.
So on that, apologies. So usually on a second charge, it used to only be, we could only allow to go up to 70%. That has recently changed to 75%. So it gives us a little bit more, It gives us a little bit more flexibility. So apologies for that. That's a typo. It's now 75%. So in that scenario, it'd be £100,000. The key to utilising this equity is your first charge mortgage lender. There are some first charge lenders who don't allow second charges. So if ever I speak to a client about unlocking the equity by way of a second charge, I will always say to them first, have a chat with your first charge lender. You don't want to be going full steam ahead with deals and putting money down unless you categorically know they are going to allow that second charge, because if they say no, you're unable to utilise that equity as a second charge.
Do you know on top of your head, like, which are the high street lenders that wouldn't allow this?
So usually it's Landbay.
Okay.
The Mortgage Works, Paragon.
We are competing on the accent here, Kirsty.
Sorry. I have tried to spell it down as best I possibly can, because I couldn't do that presentation in 60 seconds normally if I was in Liverpool. So yeah, Paragon can sometimes be a little bit tricky. Most of them, to be honest, aren't too bad. Your Birmingham Midshires, they're fine. Kent Reliant, your high street lenders, they're normally fine. It tends to be the smaller lenders that don't really like the second charges, and I've never understood it, because if for whatever reason, we had to repossess the property, they would get their money first anyway. So it doesn't really make any sense to me, but obviously it's their criteria. So I'm doing a deal at the moment for my partner's friend, and he's actually with Aldermore. Aldermore have said no, but they don't usually. So sometimes it can be dependent on what mortgage you've got with them as well. So Aldermore have said no, but he needs to utilise that equity. He's on a variable rate with them anyway, so the rate isn't great. So what we've decided to do is, rather than take a second charge, we're going to lend him a little bit more money and take out Aldermore completely. And then when he refinances the new property he's buying, he'll just refinance both properties at the same time and pay us off in full.
Okay, that's cool. Thank you. The next question is from Sarah. So can you explain how financing works with you guys when buying at auction?
More than happy to send this over in the chat in a second for you, but we have a pre-approval link. I can dig mine out in a second and pop it in the chat for you, but we've got a pre-approval link, and if the property is fully residential, you can go on that link. It asks you for a couple of questions. Are you buying in a limited company? Are you buying for business or investment? And it'll ask you also just how much your maximum bid is, a little bit about the property and things like that. And with that, once you've filled it in, it will give you an instant decision in principle prior to the auction. So it'll do a soft search on your credit file, and it'll also do a free desktop valuation on the property. So we can get you pre-approved prior to auction if you want to. Some people don't mind. They will just go full steam ahead and then call me up once they've secured the property, and then we can take it from there. But usually the process would be, you can either complete the decision in principle link, get your pre-approval, then once hopefully you've successfully bought the property at auction, you would then come back to us. If you want to...
Is that this? Kirsty, can you see this? Is that...
Yeah.
Get this
here? Yeah.
Okay,
perfect.
I'll share it.
Yeah, perfect.
Okay.
So what will happen is, once you've bought the property at auction, I will call you up and run through, make sure all the information on the decision in principle is correct. If you want to service the loan, we'll get proof of income off you, and we'll also get your solicitor details. And then that's it. It's just as simple as that. We'll need to understand what your exit strategy is, so whether it's sale or refinance to buy to let. But it's really simple and straightforward at buying at auction. What I always say to my clients when they're buying at auction, even if you're a really experienced investor, there's a lot of vendors at the moment that are putting special conditions in the legal pack, and they do it in such a way, unless you are looking for it, it can be missed. So I'll always say to clients, get your solicitor to read the legal pack in full, even if it costs you a little bit of money. It's worth its weight in gold. I've just had a client buy a property at auction, and he didn't realise that it was a bank repossession, and the bank were making him pay the tenant arrears on top of the purchase price, which was another £15,000. So always read the legal pack, always go and view the property. If you don't know much about what the refurb entails, take a builder with you, and try and, if you're buying at auction, try and get your pre-approval in place. Give me a call, we can run through it. And then once we've got your proof of income and your solicitor details, goes over to our underwriting team. They'll review it in 24 hours, and then we'll get the legal pack over to your solicitor, and they'll obviously do what they need to do in order to satisfy our requirements. Hopefully they'll then report to us. And we usually, once we've satisfied all of our requirements from a legal paperwork perspective, we'll usually fund either the same day or the next day. So
Sarah,
really,
broad question. Sorry, I'll let you carry on. Kirsty,
just a really slick process, which is exactly what you need when it comes to buying at auction, because you really can't have any delays or hiccups. There's so many people that come to me that have tried to get, buy-to-let mortgages and things like that, and the lender just hasn't been able to deliver within those auction timeframes.
More broadly, if you want to learn about auctions, so this is the first edition, right? Before the Hammer Falls, from the guys at Hammer, Piotr and Jay. We've had them on the Deal Final Corner before. If you come to we are doing an event property store event in like 3-4 weeks time, and I've got copies of this I will give to anyone who joins. It's a great one. The best book I know for auctions, and certainly one of the best ones in property. So I'll give you a copy when you come to any property store event, right? So really cool stuff. And the second question was, how does your rate compare with other bridges or other lenders?
So, being completely honest, from a rate perspective, we don't seem like we are the cheapest in the market, because a lot of clients, quite rightly, will concentrate solely on the rate per month. Now, what a lot of other lenders will do is they will add additional fees onto the deal. So additional admin fees, lender legal fees, valuation fees. So from an overall cost perspective, we won't be beaten on bridging. So we will always say to clients, we will quote you, as best we possibly can on our best rate. However, if you can get a better deal overall elsewhere, we'll always beat it.
Yeah, it's quite competitive. Great, thank you.
Sorry, I was just going to say, the beauty of dealing with us is you don't have to go through a broker to get to us. You can come to us direct. So that saves you a little bit as well on fees.
So obviously it depends on the strategies you have and things like that. If you are mainly doing this one strategy and you have this one relationship, it's great. Sometimes I find people are doing a variety of things. Personally, I quite like my broker relationship, even though they'll go two together as well. But say that I would say have all the conversations, have the relationships with the broker with together.
Yeah. Listen, broker, brokers are brilliant. They serve a purpose. They help a lot of clients out. But as I say, from a lending perspective or a together perspective, if you like, you don't have to go through a broker to get to us. And we like dealing with clients direct. We like to build relationships with clients. We like to help you achieve your goal.
Yeah, love it. Manisha is asking, I am currently structuring a deal at £380,000 for a 5-bed HMO with a hybrid vendor finance and a mortgage by using equity from another property. Am I correct in thinking that I do not have to release the equity but could use the bridge facility?
Correct. Yes. So rather than releasing the equity from your current asset that you already own, we could look at just taking a first or a second charge on the property, dependent on whether or not it's got a first charge on. So the beauty of this is, if you only need the funds for a really short period of time, you don't have to go down the remortgage route and pull an equity out that potentially you're only going to keep for a short period of time. And then once you've done what you wanted to do with that equity, it's the capital out of it, it's potentially just sitting in the bank and you're paying interest on it for nothing. Whereas with bridging and with this type of transaction, you can pay back the bridging facility whenever you want, and then our second charge comes off and you've still got that equity in the property if you wanted to utilize it again, if that makes sense.
Mm-hmm. And the question, I think the complexity here is also there's a vendor finance element to that,
Yeah, so we don't mind vendor finance. It's with us, being blunt as I already am, as I always am, sorry, is we like you to have some skin in the game. So if a client comes to me and they're buying something for £100,000, it's residential, so we're going to lend up to 75% of that, which is obviously 75,000, and the vendor is giving them vendor finance for all of the deposit. It wouldn't be a deal that we would accommodate, because we would see that as 100% lending, because the client has got no physical capital in that transaction. So if it goes upside down the deal, they don't mind just walking away. Whereas if you've got additional security in the deal, or you've got capital in the deal, you've got more of an incentive to make it work. So but in that scenario, if he'd have said, I'm going to get 15 grand vendor deposit, but I'm putting 10 grand of my own money in and doing the refurb,
or is it, like maybe 15 grand from the vendor deposit and then 10 from a security on my house? Would that be okay?
Yeah, that would be perfect, because we've got that additional security, and the client's got that skin in the game. And as I said earlier, a lot of people are doing more creative deals, more creative ways to buy more property and expand, and we understand that. And as a lender, we've always been very much, no, it's got to be capital or asset in the deal, but we've got to change with the times, like everything. So we've got to adjust our lending criteria if we want to grow and continue to support investors.
Yeah, that's great. So you can go and go again and go again, which is really cool. Question from Mohammed. So the fees you charge if additional commercial security is used on a buy-to-let, and a buy-to-let on a resi property I'm buying, what cost is involved with that? So I'm guessing the question is, if have you got fees for cross-lateral and things like that, or is it all part of your deal structuring?
No, it's all part of the actual deal. If anything, dependent on the loan to value across the whole deal, you might find if you use an additional security, you get a better rate.
Yeah.
Because you're reducing our risk.
Okay. Yeah, it's good to learn. And then I did share the link here to the Property Filter community thingy, so to fill the form here. And from there, you have also, I believe, there's some discount and stuff we sort of negotiated some years ago now together.
Yeah.
Next question, Alessandra. So could you please repeat the title of the auction book you mentioned? Sorry, so it's called Before the Hammer Falls. And if you come to a Property Filter event, like we're doing one in March, I'll give you a copy because they very, very kindly gave us a palette of it. So it's quite good, guys. And anything these guys do, follow them, go to their stuff. It's really good. Comfort, interesting. Can you please give us some margins in the interest rate? So you got some broad, like monthly interest rates or something for bridging auction purchase you guys normally do?
Yeah, no problem. So if the property is fully residential, our interest rates start from 0.77% per month. All of our arrangements...
Sorry, once more, I got distracted. What was that? Was that, Kirsty? Sorry.
So if the property is fully residential, so a house or a flat or a HMO, then our interest rates start from 0.77% per month.
Okay.
Yeah, all of our arrangement fees are 2%, but we do have a minimum fee of £1,000, because our loan sizes, our minimum loan size is £26,000 on bridging.
Okay. And then if you use the link, you got basically a quarter of that fee that is waived. So
And then on semi-commercial and mixed use properties, the interest rate's slightly higher. That starts from 0.83% per month.
It's still very competitive, to be fair.
Yeah, they are. I mean, listen, don't get me wrong. They are the best possible rates. It depends on LTV. It depends on loan size. But if you give me a call and, you let me know that you've come via, Property Filter community, we'll always give you the discount on the arrangement fee and our most exclusive rates. And that goes for bridging and buy-to-let commercial rates as well.
Beautiful. Any other questions? So Claudia is asking for the link, so I'll just put it back again. Here we go. Any other questions on bridging, doing deals? Whilst we get people to find their last questions, Kirsty, do you have any sort of interesting stories? Some anecdotes from your career, some crazy shit you've seen. I don't know. So some things that have happened.
I see it every single day. If I'm honest with you, it's so the crazy deals are slowly becoming more and more the norm.
Right.
Because as I say, a lot of people are getting more creative, but
What do you mean crazy? As in the crazy characters of the people you deal with? Or
So crazy characters, crazy assets. So at the moment, I'm lending on dog training kennels. I'm also lending on a large property that does holiday lets, but they've got like an equestrian centre on there as well. We've lent on public toilets before that went into auction. Couple of gentlemen's clubs we do as well. We don't judge together. If it's worth something, we'll lend on it. But yeah, I mean, from our perspective, we'll lend on any type of property in any condition anywhere in the UK. If there is a deal to be done, we will absolutely do it. Well, I don't know whether anyone's interested in getting into social housing. We do a lot of social housing deals at the moment. We lend to a lot of overseas investors, and we don't penalise. So if the client is overseas, we don't increase the rate, we don't increase the loan to value. So we're more than happy to lend. But yeah, as I say, the deals are getting crazier, and so are the clients. But I like it because I've been doing it for 10 years, so I like that no deal is the same. You're speaking to a variety of people all the time, and it's good. It's interesting. It's stressful, especially under, because people are relying on you and they don't want to lose their money. They don't want to lose the deal. And even though, we've all got to work together to get the deal through, you do feel like that the onus is on you to make sure everything goes through swimmingly.
I think you are addicted to the chase, the deadlines, you love it. Yeah.
Yeah. I moved over into a different sector of the business a while ago, and it was more dealing with financial advisors and getting deals from solicitors and things like that. But them deals are slow paced, whereas I like the fact that someone phoned me up a couple of weeks ago and was like, I need £300,000. I've just agreed to buy a new villa in Dubai, but they didn't tell me that when I agreed to it, I've got to pay them this 300 grand in like 3 days. And if I don't do it, I've got to pay them a heavy penalty. So those are the deals that I thrive off. And it really does show, what we can do as a business.
That's quite cool. A question from Ira: do you take into account income for those deals, or do you have to have a minimum income? Do people need to be in work or demonstrate income?
No, so we don't require you to have minimum income. We don't require you to be employed, either or self-employed. So a lot of clients that I touch base with are either only working part-time, or they've come out of work completely to do this full-time. So if they're only just getting into the property game and they've got no, regular income coming in, we can look at it one or two ways. We can either just do straightforward retained interest and the affordability element doesn't come into it. Or if they are going to rent the property out, we can also look at the projected income that the property is going to make.
And you consider if it's something else like buy to let, like for example, maybe it's a service accommodation, or maybe it's some
Yeah,
kind of supported living type
yeah,
contract or something
yeah.
like that.
So I come, as I say, I do a lot of social housing deals at the moment. More long term mortgages I do in the social housing world, just purely because there's not many lenders out there that will lend on those types of leases, because it's not your standard AST, or it's a lease, isn't it, on a residential property. So some lenders just don't like it, whereas we don't mind that. We understand the process, we understand how it works. Obviously, we've got to be cautious about what social housing providers are going to be leasing the property. We've got to make sure that they're reputable, ethical, because ultimately, we don't want anybody, vulnerable, living in the property, and the social housing provider can't pay the rent, so then the landlord can't pay the mortgage, and we don't want to be in a position where we've got to evict a vulnerable person. So we do make sure that we do all our necessary research, but now we can look at all types of income.
Just on your sort of, it's more of a qualitative, feeling on that. Do you see like you do? It's I'm kind of asking the Kirsty house price index, like from the Halifax and Nationwide's price index, the Kirsty together strategy index. Do you say you're doing more social housing and things like that? Can you comment on the volume of these you've done like the last couple of months compared to the last couple of years? Do you find like people are
Yeah,
shifting strategies
yeah,
and
yeah. I mean, I've got a really good contact who refers all of their mentee, the people that he mentors over to me, because I've built that relationship, I've built that trust, so I've probably doubled, if not trebled, the amount of social housing loans, mortgages that we're doing at the moment. I probably on average get about 2 or 3 deals a week.
Mm.
And it's more. I think it's more a case of, because the clients are overseas, and they want a hands-off approach to the property, they feel like that is the best way to go.
there's, there's a gentleman called David in this call who might want to resonate with that because he's got quite a lot of people overseas he's packaging deals for, and it might be something there. Just putting
Yeah,
it out there. And
yeah,
so yeah, David might, should probably get in touch. And this goes to show, guys, like the markets change, the strategies that used to work, in 2024, 2025 are not the ones that are going to thrive this year, So did you see on the Kirsty together strategy index, we can see that this has tripled 4x, in recent months, So really want to get yourself up to date with these strategies. So yeah, so that's probably, I'd look more into these than stuff you've heard about since 2018 that don't work anymore, right? So
yeah.
this is
Especially
really,
because as the time changes as well, a lot, the rights are going more for the tenant, on your standard assured tenancy agreement. So people are diversifying into other avenues of their investment property. Well, obviously, I'm not saying that is the way to do it, but maybe mixing it up a little bit, minimizes the risk.
Mhm. Yeah, awesome. Next 2 questions, and then we'll wrap up. So Sue is asking, could you consider funding small viable campsites with outbuildings with development potential?
Yeah, so we can look at financing land acquisitions. Yeah, we do a lot of that. So we finance a lot of land acquisitions that don't have planning. And what usually happens is clients will buy the land without planning. They will obtain the necessary planning permissions, and they will either refinance off to a development finance lender, or they'll sell it. They'll sell the land, and hopefully make a little bit on the back of it.
Yeah, great. And then the last question we have so far from Comfort. So I think it's bouncing out on your the funding of the villa in Dubai. So do you fund overseas properties, or this was structured into a different way?
Oh, apologies. So he was raising the money on a new asset he was purchasing in Dubai, but the assets we were raising on were in the UK. So we only lend on UK property.
Yeah, so if you think, like people refinance their homes to pay for their, I don't know, kids' weddings, so it's a bit similar here. So you go and refinance or put a security, use your home or a property you own as a security, and then you can do whatever you want with the money in this kind of setup. So yeah, thanks. That was really, really insightful, Kirsty. Thank you so much for joining us.
If people want to put in the suggestion box together that they want us to open a Dubai branch, I will put my name in the hat to go and set that up.
Okay. If enough of us are moving there, we might get you there to fund all our deals there. Thank you so much, Kirsty. Have you got any sort of closing sentiment to leave us with?
Thanks so much for listening. And as I mentioned a few times, we really want to ramp up. We really want to assist people. So please don't hesitate to reach out if you've got any questions on what we've discussed. If you've got any potential projects that you just want to run past me, we're here to help.
Kirsty, much appreciated. Thank you so much. And thank you everyone for joining today's Deal Finder Corner. I hope you really enjoyed the same way I did. Look forward to seeing you next week. In the meantime, you know what to do. Like, stay in touch with the community. Log into your Property Filter account. Go and find these great deals so you can pass them to Kirsty. And I think today was a bit of a wake-up call on some of the strategies working right now on social housing and things like that. So do keep your eyes peeled from information, emails, and things from me, and come and see us in person on the 14th of March. To talk about these strategies working right now, so you can help Kirsty triple, 4x, 10x, because she's got, I think, £100 million per month as a target to go and lend. That's 3,000 more deals to do per month. So let's go and help us do that. But you can only do this if you're doing it on the strategies working right now. So look forward to seeing you next week. Looking forward to seeing you in person next month, and speak with everyone very soon. Bye-bye. And thanks for the good feedback on the chat. Thank you.